If you plan on working from home in Australia after the 1st of July 2022, then you need to know about the changes to the tax deductions you can claim on home office expenses for your 2023 tax return and onwards. In this video, I'll explain the changes that were effective from 1 July 2022. I will then explain what methods are still available to you, and finally, I will explain what you can do now to plan ahead and maximize your allowable tax deductions. So what happened on the 1st of July 2022 for claiming working from home tax deductions? The ATO stopped allowing taxpayers from using the shortcut method to calculate a tax deduction for the hours you work from home during the lockdown periods of the pandemic in Australia. What was the shortcut method? The shortcut method allowed all taxpayers that worked from home from the 1st of March 2020 to claim a tax deduction for the extra cost they incurred at a rate of 80 cents per hour worked at home without maintaining detailed records and meeting the basic criteria that applied for the other methods. The shortcut method was a very generous tax deduction that allowed most taxpayers to recoup some of the extra personal expenses they incurred. So now that we have passed 1 July 2022 and many of us are still working from home in some capacity, what are we still allowed to claim and what is the criteria? Claiming a work from home tax deduction is still permitted using either the fixed rate method or the actual cost method. From 1 July 2022, the fixed rate method has increased from 52 cents per hour to 67 cents per hour for every hour you worked from home, and you no longer need to have a dedicated home office space. The revised fixed rate method has been designed to make it easy for you to calculate the deduction. It covers internet and phone expenses, electricity and gas, as well as stationery and computer consumables, such as printer ink. The most important thing is that you're keeping the right records. Make sure your records are the hours you worked from home and evidence you paid for some of the expenses covered by the revised fixed rate method. You can also separately claim the decline in value of the work-related portion of depreciating assets like your office furniture and tech items like laptops and mobile phones. The second method that you can use to claim a working from home tax deduction is the actual cost method. The actual cost method would increase a potential tax refund compared to using the fixed rate method. The key to claiming a home office deduction with the actual method is that you must keep more accurate records like how much you spend on all expenses, including electricity for heating, cooling and lighting, how much you spend on all assets you bought over $300, how much you use for work. A hot tip, the ATO have a very handy app that's free, which lets you scan the invoices and categorizes them accordingly as you go, called MyDeductions. And I've added a link in the description if you want to use it. You also really need to separate your work-related use from your personal use to claim a tax deduction correctly with the actual method. The best way to identify your personal use is to keep a diary for a 4-week period to show your work use and your personal use to determine an average percentage of time used for both private and business. This should be fairly easy if you're using a calendar app on your phone. You need to identify the days that you work from home and how long you work there. Another hot tip, remember to pick a 4-week period that you know you will have a higher than normal business usage and not a slow period like summer holiday time to maximize the business use percentage. Okay, now we know what we need to support our claim in case the ATO checks. We can now take a look at how to calculate some common home office tax deductions. Let's start with a list of all home office furnitures that most people would have had during the tax year. I have listed purchases of office furniture, computer devices, electricity, cleaning products, and stationery to name a few, but you may have even more than what I've got. As we can claim only a tax deduction for the work-related use of any expenses or purchases that are not reimbursed by your work, I must first start with subtracting the personal use amount from the total cost using the business use percentage from my diary. I have now reduced the available tax deduction by the personal use of 8% as an example. Now for the capital assets that cost more than $300, I can only claim a tax deduction for the portion of its expected life called the decline in value. Capital assets are the larger items that can be used multiple times over many years. In my case, this would include the chair, mobile phone, desk, and the portable hard drive. However, for individual taxpayers, usually a capital asset that costs less than $300 in the year, you can claim 100% tax deduction of the business use portion in the first year, immediately without having to depreciate the cost over multiple years. In my case, this means I can claim a deduction for my chair, desk, microphone, and the portable hard drive this year, which amounts to $530 upfront in total. If you are using MyTax on your MyGov login to lodge your tax return this year, there is this very handy feature where it will calculate the depreciation tax deduction correctly for each capital asset you bought. All you need to do is go into the other work-related expense items and click on the depreciation and capital allowance tool and follow all the steps. The big benefit of this feature is that it will carry forward the calculation into future tax years, so that you won't forget or lose the calculations. In this example, I have determined the tax deduction for the mobile phone in this tax year to be $368. The next major cost is the heating, cooling and lighting costs. Under this method, you can claim the cost of the unit of power used for all your devices and equipment you use, whether you own it or not, like your work-owned laptop or monitor. This method allows you to claim a portion of the cost of your electricity bill by applying it to the average unit of power consumption for each device used for work-related purposes. As with the fixed rate method, to claim for extra electricity for heating, cooling and lighting, you will still need to have a separate room like a study where you are working, so you can prove that you incurred extra costs from working from home. If you work in a lounge room and share the space with others who are not working, like kids, while you work, then you can't show you incur extra cost and therefore you can't claim a tax deduction for the electricity use under the actual cost method. You can obtain the cost of unit from your latest electricity bill. The average consumption of power used for each device or equipment can be attained by a quick Google search of your device model. Then you can multiply it by the number of hours worked at home for the entire year. Remember to calculate the power used for all devices and equipment like lights, air conditioners, mobile phone charging, monitors, laptops, printers, and external storage devices. When I do this, I calculate a deduction of $419 for all the devices and equipment. For cleaning expenses, it is best to claim only a portion to cover the cleaning of the area you work from. This is unlikely to be a lot, but don't forget to include it. In terms of phone and internet costs, if your work doesn't pay for this, then you can also claim the business percentage of your total phone and internet bill at home using the business use percentage you calculate. All up, after deducting personal use costs and depreciating assets over the expected life, I have been able to determine a tax deduction of $2,212. In both the fixed rate and actual methods, there are a number of things you can't claim a tax deduction for, including tea, coffee, and general household items, costs related to your child's education like laptops and iPads, items your employer provides you like a laptop or phone, and any expenses that your employer reimburses you for. There usually isn't capital gains tax on the home for employees working from home in most cases. If you wanted to learn more about capital gains tax or other tax issues in your tax return, then check out one of the videos on your screen right now where I explain more for beginners. See you in the next one.